we will learn about cash budget, and here we will learn mostly about cash collection and cash payment budget. Let's see one example of cash collection budget. So for the cash collection budget, you need to show how much cash you're gonna collect in a specific month or for the whole period that you are projecting or doing budgets. And cash collection budget is actually related to your sales budget. If I could go back, in our sales budget we actually predicted what will be our total sales revenue, and we also split it up into two parts, as some portion of sales will be collected right away, that means the cash sale portion, but for the credit sales sometimes it may take time to collect those cash from your customers if you do credit sales. So we need to know for this credit sales portion that when we're gonna collect those, and based on all this information we will do our cash collection budget. So in this example you see that they are actually collecting all of their cash sales in that specific month. That means these cash sales are collected of course right away, and these are 20% of their total sales. Now for the remainder sales, that means the 80% of their total sales, which is actually their credit sales, they actually break it into few portions. So out of all those credit sales, 85% they actually collect in 1 month, 14% it needs to collect 2 months, and 1% they actually don't collect at all. It can happen, right? Sometimes you will see that some of your customer may not pay you. Right, so these are, we consider, if you remember from your financial accounting, we call it like bad debt. So now we will focus how much cash we are collecting. Of course, a major portion of your cash collection is from your cash sales, and a portion could be from your credit sales. Now you will see that as per the company policy, they are projecting that 85% of their credit sales will be collected in 1 month. That means they will check when they are doing the budget for the month of January, they're gonna check how much was their last December's credit sales. Right, so the last December's credit sales, they will check it, and then they will take 85% of that last December's credit sales, because that 80% of credit sales they will be collecting in January. And then they will also check what was their credit sales 2 months ago, because 14% of their credit sale will be collected in 2 months. That means they will check what was their credit sales in November, and they will collect 14% of November's credit sales in the month of January. This is how they're gonna show what they are collecting in January. And they will follow the same process when they are doing the February's budget. They of course will list first their February's cash sales that they collect right away. Then they will check what was their past month's or last month's credit sales. So they will check what was January's credit sales, and they will collect 85% of January's credit sales in February. So if you check their January's credit sales was 500,000, so 85% will be collected here, and then for the February another 14% will be collected. For the February month they will be collected 85% of January's credit sales, which is 4.8, and 14% of the sales that were made 2 months ago. That means 14% of December's credit sales. And this is how they will list their February's budgeted sales. For the March, they will also list their cash sales, and of course the last month's credit sales they will check. That means when they are doing the budget for March, they will check what was their credit sales in February. And you will see here the detail of the calculation is given here, that 85% of February's credit sales they're gonna collect in March. They will list it, and they will also check what was their credit sales 2 months ago, because they always collect 14% of their credit sales in 2 months. That means when they are doing the budget for March, they will check 2 months ago, which means in February how much was their credit sales, and 14% of it will be collected in March. And this is how they're gonna do March sales collection. And then they will do their total column, and of course total column you will add all these 3 months, and this total is pretty much straightforward, and you need to check both ways additions. That means if you add all those vertically, and if you add all these 3 months total cash collections horizontally, you should get the same grand total. So their projected cash collection for the first quarter is $1,609,400. This is how you should do your cash collection budget. Now you have to do your cash payment budget. Well, cash payment budget is pretty straightforward. You will be given all the information for all of their specific costs, and that includes direct material cost, direct labor cost, overhead cost, operating expense, capital investments, income tax, dividends. So this cash payment does not mean only their manufacturing cost payments. It can also include their operating expense, even the payment of the income tax or dividend. So you'll be given all this information. So what they are projecting, based on all those projected numbers, you will be doing their cash payment budget. And again, for these 3 specific months, you're gonna do 3 separate columns. One column is for the total, and of course you need to make sure that when you add across columns, that means your horizontal addition, you also need to check your vertical addition, and both way you should get the same number. So this is how you're gonna do your cash payment budget. So now we will practice one problem, and I would like to emphasize more on the cash collection budget because it's a little bit complicated. So I'll show you how to do one cash collection budget, and I'll also assign you one homework on that.